big question on everybody's lips is, where is this market going next? So just pulled up this daily Dow, and this is an 89-day average, and this is the fib range of 2019. So you can see on the demand crush with virus, we come right down to the -161 extension and just pull back into fib zones up here. And we're struggling. We've spent 4 weeks, or we're coming to the end of the fourth week, just shopping around here with no real direction. I've been shorting the highs and looking to try and get as much as I can out of this on a day trading and a swing level. Getting chopped up at times, but doing my best to, but coming out with a profit, just trying to do my best to stay in some of these trades, which is not easy when you've got this market just shuffling around. So, if you're trying to make a decision, if you're trying to get the direction on this, hold fire. The reason why I was shorting is because if you've got a massive shock like this, it stands to reason after a bounce like that you're going to see at least some profit taking and some prices struggling with that kind of resistance level. So at the moment, the reason why I've been shorting is because of this wave pattern to the downside, this most recent wave pattern to the downside. And I suggested at the in Monday that we could hit 23,000. We come to, at the moment, the low is 23,068 roughly, give or take a couple of pips. So we're 68 pips shy of 23,000. It's options expiry on Friday, so that's where a lot of stock options are coming into focus. So that tends to be a big magnet to big numbers, the big sort of support and resistance levels in the market. Hence the reason why at the beginning of the week I was suggesting 23,000 could come into focus. So ultimately, I think we are, at the very least, we're due a pullback. This market is looking as if it's lost its momentum, it's lost its bull mojo, and I would expect to see 22,500, if not this week, then into next. However, if we're at the bottom of this range and we start to close higher here, that's possible. It could start us to, that's bad English, isn't it? It could push us up to the 50%. Now, unlike the Nasdaq, this has not done 50%. The Nasdaq is almost back. The Nasdaq is a complete contrast to this. The Dow hasn't got any decent techs, and the Nasdaq is right up here. And that's Nasdaq is seeing profit taking and struggling, but this one with its industrials is really struggling. So what we've got here in the economy is a split. We've got on the upside, we've got biotechs, healthcare, and techs, and on the downside, we've got anything that is non-essential. So you've got sort of luxury goods, bricks and mortar retailers. You've got even housing and travel. Anything to do with travel. Sorry, just gathering my thoughts there. Anything to do with travel. So it's a split economy, and I think that's the way we're going to continue. That's the ripple effect of the virus. So the Dow, with its heavy reliance on stocks like Caterpillar, a couple of big oil players, Exxon and Chevron, and Boeing, of course. Boeing has been the big drag on this. No, doesn't appear to be any rescue plan for Boeing. They're talking about resuming the 737 production next month, but that's not even back in the air. So that's why you've got a divergence with Dow and Nasdaq, and that's why we could potentially see lower numbers in the Dow. And if we close under this 22.5 anytime soon, then that could open the floodgates for a complete retracement. So we're in this apex, we're in this decision corner where we've seen some selling, got some support under here. We're literally right on support as we speak now. So close under here, close lower in Friday, and that could create a downforce. Start closing higher here, particularly above 23.5, and that could create a bigger upswing. All right, so if you look at individual stocks, this is a FTSE component. This is Travelers Cost TRV, sorry, and you can see that. So this is one of the several drags, or many drags, on the Dow 30 stocks. Three-wave push down, three-wave push up, and then we're just in the process of another wave to the downside. So at the moment we're 89. We could so easily continue right down to these lows. So that's one of the reasons why there's this drag on the Dow. If you now look at Goldman Sachs, Goldman's pushed above the 50% and immediately closed lower on the 30th of April. And we've had 3 days of selling, which has taken us right down underneath this 175 support, down there at 172. So if Goldman's can't hold up, then the Dow has not got much chance. So Goldman's has got to pop back above 175 in the next 24, 48 hours, otherwise that could confirm that we are looking lower in the Dow. In the meantime, you've got Apple is in the Dow, and we have a sell signal on Tuesday. We managed to find support yesterday, so we've got to close back above this level here. This I think it's about 310. I'll check that in a minute to get back up to these highs and beyond. Otherwise, if this starts closing, we can see we're backfilled here. So this push higher here has backfilled. Now we've got to close back above there in the next 48 hours, otherwise that's yet another drag on the Dow. So you can see with a range of the quality stocks like Goldman's and Apple versus exposed stocks like the TRV. You look at any of the other travel stocks in the UK, you've got Chewy. In the US, you've got a tech stock which is in the travel industry, booking.com. Let's have a look at that one before I finish. So this is a tech stock, but obviously it's got that exposure to a very vulnerable sector in travel. So we drop down here, look at the immediate close higher. Now ordinarily that I would have said that's a buy signal, but all we've done is retest the underside of that trend line. It's what I call a kiss and tell. Just a nickname I gave a setup like that, where you break down and then they just go to test the underside. All the bear raiders jump in and they are potentially selling that with a view to coming back down to 1300 potentially, and possibly lower. I mean, the main support's down there, so you can see what's going on in the markets. You can see why there's this split economy is causing problems and causing mixed signals in some of these markets. Okay, and so be careful. This is like I said, we've got options expiring on Friday. Expecting a lot more chop and potentially selling in the last couple of days of the week, and then it's a question of where that leads us on Friday to see if there's any chance of further upside. Well, typically this time of year you would at very least see profit taking anyway. We're just coming out of the US earnings season, and obviously normally we'd be starting to think about going on holiday in June, July as we come out of this month, but obviously different circumstances. But stick to the price action. These markets are very good, very efficient at pricing in expectations for the coming weeks and months. And my suggestion to you, if you want to buy this market, look for quality and look for those sectors, pullbacks in healthcare, biotech and techs. If you want to buy the market, if you want to sell the market, look for vulnerable sectors such as luxury retail and anything exposed to travel. All right, I hope that helps. and stay safe and protect your profits. Use risk management at all times. I'm quite often using smaller size in some of my trades, but with in some cases bigger stops, and just sitting in them for longer, looking for at the moment selling the Dow to see if that Dow can continue to trip lower in this sort of environment I got. Right, stay tuned. On Sunday there is a big catch up, 7 p.m. Sunday. I'll send you the link for that. And if you want to get involved in our trading room, then drop me a line and I'll talk to you about how to get involved in our trading room. Thanks very much. Enjoy the sun, have fun, and happy trading. Bye.